We're with the Chief Investment Officer at Renaissance Asset Management, which has some $2.5 billion under management, largely in emerging markets. Plamen Monovski, great to have you with us. Why is Russia so cheap?
Russia is so cheap because the skepticism that Russia will reform has been now going on for a few years. And it's also very cyclical. We think that the reform is going to be quite real. And as you said, the entry into WTO is just part of broad measures that have been put in.
Reform is going to be quite real because there are some people who think a new Putin presidency that everybody is expecting is not going to lead to the sort of reforms that are actually needed in Russia. They've been trying, they've said, to get away from the dependence on oil and gas for years and years and years. Hasn't worked.
There are many skeptics, but people have not been paying attention. Even before we've seen the political unrest this year, the Kremlin has been steadily implementing a set of reforms related to opening the Russian economy to long-duration foreign capital. They have simplified the state ownership, they have reduced the list of strategic enterprises, they've launched a private equity fund, and now they're looking for ways to attract young professionals to work in Moscow.
But when you look at the economy as a whole, how worried are you about the dependence on oil, and if that oil price goes shooting down? Russia's in big trouble. Russia
is indeed in big trouble, and that we know what happened in 2008. The reality is that the Kremlin is more aware than most about the dependency on oil price and resources. Both Medvedev and Putin have talked about it for a long time. And there is no other way now. The economy needs to diversify, and some significant measures need to be put in place.
And what difference will membership of the WTO make?
It will be good on the margin, but it's not going to make all the difference. Of course, it will allow some of Russian exports to access more freely the foreign markets, but let's not forget, Russia is mainly a commodity exporter. However, what it tells the world is that Russia is opening for business, and with 2% of global GDP and well integrated in global trade, it now needs to grow up to the next stage. It's just one of the signposts that Russia needs to open.
Let's broaden it a little bit more and talk about China. We saw weakening export data just a few days ago. Are you overly concerned about that?
Not about one set of data, though there has been a few dark clouds around China. I'm also aware that skepticism about China is at almost all-time high. Many people are expecting hard landing. I think the situation is a lot more complex than that. The Chinese economy, although it's politically controlled, top-down control, is a very complex economy, and let's not forget that the Chinese Politburo has got vast resources still to deal with problems and issues. So we're not overly concerned.
And where's the biggest opportunity in 2012? Is it Russia? Is it China? Is it Africa?
Well, I'm glad you say Africa, because I've learned during my career in emerging markets that the real action is usually where people do not talk about. And to us, Africa looks very interesting. And as we were speaking about China, Africa very much reminds us of China in the late 90s, when it was completely ignored, it was very cheap, and it was about to go on very significant investment cycle. Africa looks exactly the same, and to us, this is a logical investment destination.
Plamen Monovski, Chief Investment Officer at Renaissance Group. Thank you very much indeed.
Thank you.